Hey everyone, I'm Dave Saylor, your trusted mortgage expert here to make home financing a little less intimidating. Today we're tackling something I hear all the time, mortgage myths, if you will. There's a lot of misinformation out there, and believing the wrong thing can cost you time, money, and maybe even the home of your dreams. So let's set the record straight. Myth number one. You need 20% down to buy a home. Surprisingly, this is one of the most common myths I hear, even though there have been low down payment programs around for a long time. You don't need 20% down. Many loan programs allow you to buy a home with as little as 3% or even zero down, especially for first-time home buyers, veterans, or buyers in rural areas. In some cases, the cost of paying for private mortgage insurance, something you typically need without 20% down, is so low, it's sometimes a better decision to not put 20% down, even if you're able. So don't let that number stop you. Reach out and we can talk about what's possible with your situation. Myth number two, you need great credit. Another big one, people think they just don't have good enough credit. They think their score needs to be in the 700s or 800s to qualify. It's just not true. There are mortgage options available for buyers, possibly with credit scores as low as in the 580s. Of course, better credit means better rates. But don't assume you're out of the running just because your credit isn't perfect. Let's talk about how we can build a plan for you. Myth number three, getting pre-approved will hurt my credit. I get it, you want to protect your credit score, but here's the truth. A mortgage pre-approval, whether it's a soft inquiry or a single hard pull, that may cause a minor dip, usually less than 5 points. Plus, all mortgage inquiries within a 45-day window count as one inquiry. So don't let that hold you back from being a serious buyer. Myth number four, renting is cheaper than buying. This one's tricky because it can depend, but with rising rents and fixed rate mortgages, buying almost always makes more sense in the long run. Owning a home means building equity, not just paying someone else's mortgage. And with the tax benefits, fixed principal and interest payments, and probably, of course, most important, the home appreciation, homeownership can be a powerful financial tool. Myth number five, you can't buy if you have student loans. I see this a lot. People have a lot of student loans, the younger buyers, and they think they're stuck until they can get that student loan debt paid off. Student loans are part of your debt to income ratio, but that does not automatically disqualify you. We look at the whole picture, your income, your other debts, and how stable your financial situation is. So don't count yourself out. Ask questions and get clarity. Myth number six. The lowest interest rate is always the best deal. This is a big misnomer. Sure, we all want the lowest rate, but it's far from the only factor. A super low rate might come with really high closing costs and/or points. What matters more is the total cost of the loan over time and what makes the most sense for your goals. Whether it's buying now, refinancing later, or paying off early, there should be a detailed conversation with you and your lender, which of course won't happen with an online lender. At the end of the day, mortgages aren't one size fits all. And the worst thing you can do is make decisions based on myths or assumptions. That's why I'm here, to help you cut through the noise, get real answers, and build a home buying strategy that actually works for you. If you've got questions about any of these myths or something else you've heard that you're not sure about, drop a comment, send me a message, or schedule a free consultation. Don't let fear or misinformation hold you back. Let's turn your home ownership goals into reality. As always, please like and subscribe.